Welcome back. Now let's discuss and revise GST refund. We will see all the cases. Let's start with the first and the most important case, that is zero rated supply. Now, there are two transactions which are regarded as zero rated supply. The first one being export of goods or services. The moment you export goods or services, it's a zero rated supply. When can you call something as export of goods? When the goods are sent to a place outside India. When can you call something as export of service? When totally 5 conditions are satisfied. Supplier is in India, recipient is outside India, place of supply is outside India, they are not merely establishments of the same person, and last, forex is received or INR as permitted by RBI. Then it becomes a export of service. So zero rated supply, first part is export of goods or services. Second one, supply to SEZ unit or developer for their authorized operation. Authorized operation meaning the operation for which they have got the permission. If they have got the permission for software exports, then the authorized operation would be software export. Now, ZRS can be of two types. ZRS can be with payment of IGST, or you can do a without payment of IGST, which is also called as export under bond or LUT. Now, what happens in with payment of IGST? You basically export goods worth 100, charge 18 rupees as GST, but you don't collect this 18 rupees from customer who is outside India. This 18 rupees you will pay it. How will we pay it? Maybe you have ITC of 10 rupees and balance you will pay through eCash ledger, or if you have ITC of 18 rupees, you can use that ITC as well. Then government will give you a refund of 18 rupees to your bank account. That means you have successfully converted your ITC into cash because it has come in your bank account. It is very useful when a person is starting business, because when he is starting business, he would have done a lot of purchases of capital goods, and on capital goods obviously he would have paid GST. Now that GST is not eligible for refund under export without payment, that is under bond or LUT. So to convert that into cash, one method which can be very well used is export with payment of IGST. There are only some products for which you don't get the option of with payment of IGST, though the product list is only for knowledge and not for exam purposes. Pan masala, some essential oils, or those are exclusions. That tobacco substitutes. So if you export these, you can still claim without payment. Export under bond or LUT is allowed, but export with payment of IGST is not allowed. Then see, here you directly get the refund in export with payment, because directly whatever is the GST which you have paid, that you get as refund. Say suppose you don't want to risk this 8 rupees, then you can go for export without payment of IGST, that is bond or LUT. In this case, when you export or send it to SEZ, you will not charge GST here also, and then there will be some unutilized ITC on your purchase side because your output was 0. There is some unutilized ITC. That unutilized ITC can be claimed as refund. Is there a formula for that? Yes. The formula for refund is turnover of ZRS of goods plus turnover of ZRS of services divided by adjusted total turnover into net ITC. Now we need to understand each of these terminologies. Turnover of ZRS of goods. Now turnover of ZRS of goods is export value or 1.5 times of domestic value, whichever is lower, and this domestic value First, if you are supplying that product domestically, you use that. Otherwise, anyone else is also permitted. Now, say suppose you export a product worth 100. In domestic market, you sell for 100 and you are exporting for 120. No problem, because 100 domestic price into 1.5 times comes to 150. 150 or 120 will be considered. But some people started showing fake values, like they will show 200 here, though the value is not that much. No one is ready to pay 200, but there is some planning happening with regard to export transactions and conversion of black into white. Something is going on by doing all this. I can't deal with full details, but there are cases where a person would show a higher value. Then government is like, I will not accept this 200. So 100 domestic price into 1.5 times, 150 or 200, whichever is lower will be considered. Then the term export value is also defined. This will be invoice value, the value which you have charged on the invoice, or FOB as per shipping bill, whichever is lower. Now see what happens. There are two types of contracts in the industry. One is FOB contract. FOB contract, free on board till the Indian port. I will arrange it. Thereafter you see how you want to get it transported. You book everything. Second one is CIF. I will charge you for CIF, cost, insurance, freight, till it reaches your country. Now in that case, what happens? In my invoice, I will mention CIF, but CIF is including freight and insurance up to the recipient's country. Should government give the benefit up to that amount or FOB value? FOB. That's why government has said invoice value or FOB value as per shipping bill, whichever is lower will be considered as ZRS of goods. What about turnover of ZRS of services? Turnover of ZRS of services is when two conditions are satisfied. One, the service is complete, plus you have also received foreign currency. Until and unless both the things have happened, it will not be regarded as ZRS of services for a particular period. I'll give you an example. Say suppose payment I have received this year, but service I am going to provide next year. Then that will qualify to be ZRS in next year. Services provided in current year, payment will be received in next year. It will qualify as ZRS in next year. Only when both the conditions are satisfied, that's when it becomes turnover of ZRS of services. And even the definition says like that: payment received during the relevant tax period. Then you have to add something where payment was received in the previous tax period, but the service is completed in the current tax period, and you have to subtract something where payment is received in current period, but service is to be provided in subsequent tax period. In that case, be very careful. ZRS of services is only when service has been completed in the current tax period plus payment is also received in the current tax period. When both the conditions are satisfied in that particular tax period, it will be regarded as ZRS of services. But sir, what is this tax period? It depends on the frequency of filing refund. See, you can go ahead and file monthly refund, you can go ahead and file quarterly refund, you can go ahead and file half yearly refund, yearly refund. 2 years is the time limit. From the relevant date, 2 years time limit is available. You can even apply for 1.5 year refund. So that is this. All this data, if you are applying for quarterly refund, all this data will be based on that quarter. Then adjusted total turnover includes all supplies. Only one thing is excluded, exempt supply. But be very careful. If exempt supply is exported, then in that case it becomes zero rated supply, because zero rated supply is the most powerful transaction in entire GST. If exempt supply is exported, then it will form part of ZRS of goods. It will also form part of adjusted total turnover. So just be very careful on this one particular aspect. Exempt supply is not included except when exempt supply is exported. Okay, net ITC is ITC availed on input and input services. Availed, not balance in e-credit. Availed. Whatever you have availed, that will be considered as net ITC. Thereafter, capital goods, never ever take it here. Block credit, never ever take here, because it should be ITC. Only then you can consider it here. Now, sir, whatever comes in the refund formula, can I claim it as refund? There is a restriction. Maximum refund will be refund as per formula or e-credit balance. E-credit balance at the end of the tax period or on the date of filing refund application. Lower of all these three will be eligible as refund. I'll give you an example. What are we calculating? We are calculating the refund of unutilized ITC. Respect the term unutilized ITC. The ITC which is not yet utilized. That's what we are claiming as refund. So just because of the formula, say suppose formula says 2 lakh, but my balance in e-credit ledger is 50,000. Can I claim 2 lakh from government? No, because I've already utilized that ITC for some domestic supplies. So be very careful. It is formula or e-credit balance as on 2 dates. One, end of tax period. Say suppose I am applying for April, May, June. Then end of tax period is June. At the end of June, when I file the return, what was the e-credit balance? And date of filing application. The day when I am filing the application, that day system will automatically check what is the e-credit balance. You can never claim refund of unutilized ITC more than the e-credit balance. That is never ever permitted. Clear? Okay. Then the second case of refund is inverted tax structure. Now what happens in inverted tax structure, sir? See, the rate of tax on input is higher. Rate of tax on output is lower. Now, if this is the scenario, what will happen always? You will always have unutilized ITC, which has not been used. Now, if there is unutilized ITC, can you claim a refund? Yes. And refund can be applied based on this formula. Turnover under inverted tax structure divided by adjusted total turnover into net ITC on inputs. Careful, here input services is also not allowed. Now if you see this carefully, this part, first part, it is nothing but proportionate ITC. ITC you are doing proportionate. Proportionate of inverted tax structure turnover divided by total turnover. Then minus tax paid on inverted tax structure, this is output tax, into net ITC on inputs divided by total ITC on input and input services, because the law believes you would have used input services as well to pay this output. So output also you are doing proportionate. If you see, this formula is nothing but proportionate ITC minus proportionate output, because when you want to calculate tax payable, what do? Output minus ITC. When you want to claim a refund, ITC minus output. Say suppose you only have inverted tax structure and turnover is 100. So 100 divided by 100 into net ITC on inputs. Input say suppose 18% and 50 rupees was the purchase. So 18% into 50 rupees, 9 rupees. So proportionate ITC 9 rupees because 100 same turnover, minus say suppose output rate. Output we have taken the turnover as 100 here. So 100 into 5%, which comes to 5 rupees. 5 rupees and net ITC on inputs 9 rupees. Say suppose total ITC is also 9 rupees. There is nothing relating to input services. Then this will also get cancelled. So how much of refund are you eligible? 9 minus 5. What have you actually done? ITC minus output. With other numbers being there, this will never match always because the formula needs to be applied. But be very careful. It is nothing but proportionate ITC minus proportionate output. But ITC is only related to inputs. That's the disadvantage. If it was for input services, capital goods, whatever was the balance in your e-credit ledger, you would have got that refund. But this is how the law has been framed. You'll have to apply the same thing which is given in the formula. Clear with this? Yes. Okay. In inverted tax structure, government has an option to say that for certain goods or services, I will not allow inverted tax structure even if the rate of tax on input is higher than the rate of tax on output. So if it is denied by government, then anyways you will not get ITC refund. Then the third case is deemed export. Now there are four transactions which are regarded as deemed export. See, these are goods which are manufactured in India but they don't leave to a place outside India. Still government wants to give some benefits, like supply. Four transactions are supply to a person having advance authorization, FTP advance authorization, supply to a EOU because EOU is involved in exports, supply to EPCG, export promotion capital goods scheme, EPCG person is also engaged in exports, supply of gold by PSU or bank against advance authorization because they are permitted to sell gold against advance authorization. So in these four transactions it is regarded as a deemed export. Deemed export you cannot do without payment of GST. See, ZRS, zero rated supply, you can do without payment of GST. This always has to be with payment of GST. And there are two things. Supplier collects GST from recipient. Say suppose supplier collects GST from recipient, then recipient will claim refund because who has borne the tax? Recipient. All refund claims are subject to a principle of unjust enrichment unless and until there are some specific cases, because I have to prove that I have borne the tax, only then I can claim a refund. So if supplier collects GST from recipient and recipient claims refund because recipient has borne the tax. In other way, supplier pays GST from his pocket, then the supplier can claim refund. So whoever has borne the tax, he can claim refund. This is a special case where the person who has borne the tax, he can go ahead and claim the refund. Okay, then you have merchant exporter, because this is basically a exemption notification, partial exemption notification, but it is very interesting relating to export transaction. See, merchant exporters are basically traders. What do? They are involved in exports. They are very good at export. They have very good contacts outside India. They are registered with Export Promotion Council. Now, say suppose 18% is charged as GST on the purchase. They will be eligible for refund, but they will have to go to the department. That money, working capital will be stuck. There are other implications like running behind the department again and again, and that's why government gave a special rate for them of 0.1%. So instead of charging 18%, 0.1% will be charged on anything, or 12, 5, never any rate is charged, it will be 0.1%. And is the merchant exporter eligible for ITC of this 0.1? Yes. And he can adjust it with other domestic supplies. Now this 0.1%, the advantage is you don't have to claim refund. But sir, then what about Mr. A? Mr. A would have still paid GST on his purchase. What happens to that? Mr. A can claim a refund under inverted tax structure because he has paid GST of 12% here and he has paid 0.1% on the output. That is eligible under inverted tax structure. This merchant export is only allowed without payment of IGST. You can't do it with payment of IGST for a simple reason that you have not paid any taxes on your purchase. As you have not paid any taxes on your purchase, it has to be only without payment of IGST, that is under bond or LUT. There are other conditions that you should export it within 90 days. You should mention the name of supplier, main supplier, manufacturer, as well as merchant exporter in the shipping bill. The jurisdictional officer of the manufacturer needs to be informed saying that this transaction has been conducted. So there are formalities which have to be met, and then you can enjoy this lower rate of 0.1%. Okay, then coming to e-cash. Can you claim a refund of e-cash ledger? Say suppose some money is lying in e-cash ledger, can we claim a refund? The answer is yes. Plus there is no time limit to apply. See, other cases you have a time limit of 2 years from the relevant date, but for e-cash ledger there is no time limit at all. At any given point of time you can claim a refund of money in e-cash ledger. Wrong place of supply. Say suppose I have paid C plus S instead of IGST, and later I get to know that oh, I paid C plus S instead of IGST. Then I have to pay IGST now, and then I can claim a refund of C plus S. Within what time period? 2 years from the date of payment of correct tax. The day when I pay the correct tax, from there within 2 years I have to file a refund application. Then we have refund voucher. Refund voucher, see, when you receive a advance, you issue a refund receipt voucher. Now thereafter, say suppose the customer does not want the service, then you will refund the money. Now when you are refunding the money, you will issue a refund voucher and give the GST back to the consumer, but that you have given from your pocket. Can you claim a refund of that? Yes, 2 years from the date of payment of tax you can go ahead and claim that money from government. UN or embassy or canteen store department. Canteen store department is of Ministry of Defense. Can they also claim a refund, sir? Yes. UN embassy or canteen store department of defense, whatever they have paid as taxes on purchases, there are some conditions that GSTR1 should be filed for canteen store department. Supplier has filed it, he has paid the taxes in GSTR3B. Canteen store department only gives it to other canteen units or authorized supplies, which is obviously done. So then the canteen store department can claim refund of 50% of the taxes, that is CGST component can be claimed as refund. And what's the time limit for both of these? The time limit is 2 years from the end of the quarter in which inward supply was received. So if the inward supply is received in Jan to March quarter, so from the end of March, 2 years time limit will be available. Can a tourist claim refund? The answer is yes. Whatever goods he is taking outside India, for that tourist can claim refund. But there is no provision at present. It is all as may be prescribed, nothing is prescribed. In fact, IGST law also says that whenever you are selling to a tourist, IGST has to be charged. But the provision is not activated because there is no process prescribed for how a tourist can claim a refund. That process is not there. Provisional assessment. Now what's provisional assessment, sir? Say suppose sometimes we are confused with regard to the tax rate. We are not sure whether 12% will apply or 18% will apply on our product. Then we can go to the department and say, department, I am confused whether 12% will apply or 18. Now say suppose department says now pay 18, then we will see. And after some time when he does the analysis, department officer does the analysis, he finds that 12% is applicable. Now you have already paid 18. Now the officer is saying 12. Can you seek a refund of 6? Yes. You can seek a refund of that 6. 2 years from the date of adjustment made in final assessment order. In the final assessment order, the provisional taxes are adjusted. Once the order is available with you, you can claim a refund of excess tax. Judgment, yeah, within 2 years from the date of judgment. Say suppose court case is going on. Department officers have already recovered the tax from me. Then I filed a court case. I win the court case. Can I claim a refund of that excess money which government has? 2 years from the date of judgment. Say suppose I pay some excess tax as an unregistered person. Can I claim refund? Yes. Now there are very good points in this. Say suppose I have booked a flat. I pay advance. GST is discharged. I pay the GST to the builder. Builder issues me an invoice and he has already paid GST. 2 years later, I seek a refund from the builder because work has not started. I want my money back. Now the question is, can I claim GST on that? Now builder will not give me GST. Builder will only give me the main amount, because builder will say, I have already paid GST to government, I cannot give it back to you. But sir, he can take it back from government now. Credit note. This is the last date to issue credit note. Last date to issue credit note is 30th November after the financial year, or date of filing annual return, whichever is earlier. So builder cannot get that GST back from government. So he will not give me back GST. Can I as a consumer go to government and claim refund even though I am unregistered? The answer is yes, and 2 years time limit will be available from the date when goods or services are received. But here it is not at all received, so CBIC has said from the date of that cancellation letter. I will obviously have to give that cancellation letter, agreement, initial agreement, declaration from the builder that he is not going to issue credit note and claim a reduction of taxes. All that formalities needs to be done. But can I still go ahead and claim a refund? Yes. Same thing can happen in insurance premium. Say suppose I pay an insurance premium, then after 2 years the policy is not accepted. So the insurance company will cut GST and give back the premium to me. Can I claim that refund of that GST? The answer is yes. I can go to government and claim a refund because I have borne the tax. Reason for this is all refund applications are subject to a principle of unjust enrichment. Unjust enrichment meaning only the person who has borne the tax, he can claim refund. Anyone else claiming refund is unjustly enriching himself. So in all cases I have to prove unjust enrichment, except in case of refund voucher, wrong place of supply. E-cash anyway is not required to prove. Export with payment or without payment, I am not required to prove that I have unjustly enriched. All other cases I have to prove that I have not unjustly enriched myself and I have borne the tax, so I am eligible for a refund. This is what the law provides. Clear? Okay. Now, whenever you talk about all these cases, we have discussed these 2 years for all these cases. What about other? Merchant exporter 2 years is not applicable because he doesn't apply for refund only. Deemed export 2 years from date of filing GST return for the tax period for which you are claiming refund. Inverted tax structure 2 years from the due date of filing GST return for the tax period for which you are claiming refund. Zero rated supply, there are a lot of cases like say suppose normal you are doing export without payment of GST, unutilized ITC, then due date for filing GST return from there 2 years. Other than that, export with payment for goods, whenever the ship leaves, whenever the aircraft leaves India, whenever the post is dispatched. For services, it will be invoice or payment, whichever is later. From there, you will start counting 2 years. Clear? Okay, so then you have some miscellaneous points like Rule 96. Now, obviously, there are some procedural provisions which you will go through once, and documentation like how do you file a refund application. When you file a refund application, officer can issue a deficiency memo. If he issues a deficiency memo, you have to file a new refund application. Thereafter, once he accepts it, that is considered to be the date of filing the refund. Between the officer issuing deficiency memo and I filing the new application, that period will be excluded for counting these 2 years. Then withdrawal of a refund application can be done by me. Those small points plus officer can stop my refund, which is called as withholding of refund. In cases where any fraudulent transaction reported by CBIC or by custom officer, then the refund will be withheld, it will be transferred to some other officer and it will be treated as a new refund application. Those points are there. 3 special points are Rule 96, 96A, 96B. Rule 96A is for with payment, Rule 96 is with payment of IGST. You report that transaction is 1 and 3B, and the moment you file shipping bill for goods, and shipping bill can apply only for goods, it is a deemed refund application. You don't have to file any other refund application under Rule 96 for with payment of IGST. Now, under bond or LUT, what do you mention in LUT? LUT is letter of undertaking. What undertaking do you give? For goods, you give an undertaking saying that if I don't export the goods within 3 months from the date of invoice, then I will pay GST within 15 days along with applicable interest. After 3 months expired, within 15 days, I will pay GST with interest. For services, if I don't receive the forex within 1 year or FEMA time limit, whichever is later, and FEMA is along with extensions given by RBI, then I will pay GST within 15 days along with applicable interest. Plus, commissioner can give an extension for these cases. Rule 96B is for goods where forex is not received. Say suppose I have not received forex. Now in goods, you can claim refund even without receiving forex. Oh, is it, sir? Yeah. In goods, you can claim refund without receiving forex. For services, it is invoice or payment, whichever is later. Then you can apply for refund. For goods, even without receiving forex, you can go ahead and file a refund application. Now say suppose you have got the refund, but you did not get forex. You have to pay back the refund along with interest. Sir, what if after I pay back the refund, the recipient outside India gives me the refund of the tax of the money which was due? I received the forex. I can reclaim this refund, but I will not get interest. There is one exception. Say suppose RBI writes off the requirement of receiving foreign exchange, then Rule 96B will not apply. No need to give back the refund. Say suppose my recipient is in Ukraine, war affected zone. I applied before the war. Now I am not getting money because his shop is only not there. Then I can make an application to RBI saying that please write off the requirement of receiving forex. If they write off the requirement of receiving forex, then it will get cancelled. Clear? Okay. Now, some important aspects. Export of service. Remember the definition very well. 5 conditions. Supplier is in India. Recipient is outside India. Place of supply is outside India. Not merely establishment of a distinct person. Not merely branches. If they are companies, separate companies, then refund is eligible. Then last condition is forex or INR as permitted by RBI is received. Then you have upward revision. What do you mean by upward revision? See, there can be cases where there is an upward revision clause in the agreement. Now I sell goods to you. I sell it for 100 and I do export with payment of GST. So today I have sold it for 100. I would have charged GST of 18 rupees. Correct? I would have claimed refund of that 18 rupees. In the agreement, there was a upward revision clause saying that the price can increase by another 10 rupees when a particular point is triggered. Now, because of that trigger, I raise a debit note to you saying that 100 I have already received from you. Now I need 10 rupees extra. Now, earlier I had done export with IGST. So, this 10 rupees also I have to do with IGST. So I will have to pay this 10 rupees with IGST. Can I claim a refund of this 10 rupees with IGST, that IGST component? Now government has allowed it, saying that yes, you can claim a refund of that GST on upward revision of prices, but you have to file a separate refund application. It's not a deemed refund application. Separate refund application, CS certificate required, upward revision agreement to be given, shipping bill, original shipping bill with all the documentation of the original transaction needs to be given, debit note needs to be given, invoice needs to be given, and a proof that that particular upward revision prices have been received. Then you can claim a refund. But sir, when upward revision happens, when I issue debit note, should I pay with interest? Yes, because the transaction of debit note which you are raising now, the time of supply will be the main goods, not today. So you'll have to pay with interest. Will I get the refund of interest or no? Downward revision. Similarly, downward revision also can happen. Saying that today I supplied for 100. Thereafter, there is a downward revision of 10 rupees. Now I will issue a credit note, and I will issue credit note with GST. And that GST I will claim as a reduction in my GST returns. Should I pay back the refund relating to that credit note which I had received earlier from the government? The answer is yes. That portion of credit note GST, I can reduce it from my output, but I will have to give it back to government with interest. So the net income of government in this is interest, because when I raise a credit note, I will reduce my output in GST returns and I will refund that amount to government. That is also mentioned in the law. So be careful on these cases. Okay, let's now quickly go through all the cases which we have dealt with. The first topic was zero rated supply, two types. One, exports. Second one, supply to SEZ unit or developer for their authorized operation. With payment of GST, if I do with payment of GST, whatever GST I have paid, I can claim a refund of that. If I do without payment of GST, then unutilized ITC can be claimed as refund. Formula: ZRS of goods, turnover of ZRS of goods plus turnover of ZRS of services divided by adjusted total turnover into net ITC. How much refund can I claim? E-credit balance or formula based, whichever is lower. And E-credit balance is to be checked at 2 times. End of tax period for which I am claiming refund, and E-credit balance on the date of filing refund application. ZRS of goods definition: export value mentioned on the value of supply for export, or 1.5 times of domestic value, whichever is lower. Then export value is also defined: invoice value or FOB value as per shipping bill, whichever is lower. ZRS of services is only when service is provided plus forex is received, when both the conditions are satisfied. Exempt supply is not included anywhere except when exempt is export. And remember, whatever you are using as ZRS of services and ZRS of goods in the numerator, same ZRS will be considered in the denominator. Net ITC is only on input and input services. Inverted tax structure, where rate of tax on input is higher compared to rate of tax on output. Then the formula is turnover under inverted tax structure into adjusted total turnover into net ITC on inputs. This is nothing but proportionate input minus tax payable under inverted tax structure into net ITC on inputs divided by total ITC on input and input services. This is proportionate output. 2 years is from the due date for filing GST return. Deemed export, 4 cases: advance authorization, EOU supplies, EPCG, gold against advance authorization. Here it will always be with GST. Whoever has borne the tax, he can claim refund, and the time limit is 2 years from the date of filing GST return. Merchant exporter has one exemption notification. He can purchase at 0.1%. 0.1%. Be very careful. Is he eligible for ITC? Yes, but he can't claim refund of this 0.1%. Anyways, that was not the purpose. If he had to claim refund, he would have gone ahead and purchased at 18%. But the supplier to merchant exporter, he can claim refund under inverted tax structure because he pays tax at a lower rate on output. E-cash ledger, can you claim a refund? Yes, without any time limit. Wrong place of supply, allowed. 2 years from date of payment of correct tax. Refund voucher, 2 years from date of payment of tax. UN embassy canteen store department, 2 years from the end of the quarter in which inward supplies were received. Tourist, yes, refund can be claimed. Provisional assessment, yes, 2 years from date of final assessment. Judgment, 2 years from judgment. Excess payment made, you can also claim refund as a consumer. Then rule 96, 96A, 96B. 96 is with payment of GST, 96A under bond or LUT, 96B forex. Forex not received for goods, you'll have to pay back the refund. Export of service, very important definition. Upward revision, important provision. Downward revision, you'll have to pay back. Don't forget interest. See, if department does not pay within 60 days from the date of filing refund application, I am eligible for a refund along with interest at 6% per annum. And if it is through a judgment, then the interest which I will get will be 9% per annum. But if the delay is because of me, saying that they have issued a show cause notice, I have not replied within 15 days, then the period for which I don't reply after 15 days, that period will be excluded in this interest. Plus, bank account needs to be validated. If bank account is not validated from my end, then in that case the time period taken for that validation will be excluded for computing interest, because interest is a cost to government. Government wants to reduce its cost. Unjust enrichment, don't forget it. If you are not able to satisfy unjust enrichment, the refund, even if you are eligible, will be transferred to consumer welfare fund and it will be used for consumer welfare. Clear? Okay, see you in the next video.